Good evening, everyone. Welcome to Q4 and FY18 conference call of DB Corp Ltd. We will be sharing the key operating and financial highlights for the quarter and year ended 31st March 2018. We have with us today the senior management team of DB Corp Ltd, Mr. Pawan Agarwal, Deputy Managing Director, Mr. Girish Agarwal, Non-Executive Director, Mr. P.G. Mishra, Group CFO, and Mr. Prasoon Kumar Pandey, Head Investor and Media Relations, who are representing DB Corp Ltd on the call. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risks and uncertainties. Documents relating to the company's financial performance have already been emailed to you. I invite Mr. Agarwal to share his outlook on DB Corp's performance for this quarter.
Thank you, Malini, and good evening, everyone. We would like to share some key highlights of our financial and operating performance for the quarter ended 2018 March, post which we will be happy to respond to your queries. Let me start off the discussion by talking about our circulation expansion strategy, post which I will discuss the key financial highlights for the quarter and year ended March 2018. Circulation expansion strategy has delivered strong results during the year as reflected in our numbers. A focused and well-executed circulation strategy has resulted in almost 18% growth in terms of number of copies sold. To put it in numbers terms, we had around 59.6 lakh copies as of March and 2018, as against around 51 lakh copies in June and 2017, increase of around 9 lakh copies in mere 9 months. Growth was majorly delivered in markets of Bihar, Rajasthan, and Gujarat. What makes this performance even more commendable is that it has been achieved on the back of higher circulation base and increased cover price. Our circulation strategy was complemented by strong editorial and product enrichment efforts, along with unique and impactful reader engagement initiatives. Over the past 5 years, Dainik Bhaskar has delivered 15% CAGR growth, driven by yield in core legacy markets, much above industry reported numbers. Moving on to quarterly performance, consolidated total revenues stood at Rs 5,745 million as against Rs 5,222 million, reported during Q4 FY17, higher by 10%. Ad revenues for the quarter stood at Rs 3,861 million as against Rs 3,567 million, reported in Q4 FY17, higher by 8.2%. Circulation revenues grew by 8.5% YOY to Rs 1,320 million as against Rs 1,217 million, generated during Q4 FY17, largely an outcome of circulation expansion strategy. EBITDA for the quarter stands at Rs 1,051 million as against Rs 1,173 million, reported in Q4 of last year, considering forex loss of Rs 9.9 million. Excluding impact of circulation expansion related one-off expenditure, EBITDA growth would have been in mid-single digit. PAT for the quarter stood at Rs 571 million as against profit of Rs 642 million generated in Q4 FY17, after considering forex loss of Rs 16.4 million. Further, excluding circulation expansion strategy related one-off expenditure, PAT would have seen double-digit growth. Our consolidated total revenues for the fiscal stood at Rs 23,522 million as against Rs 22,750 million during FY17, registering a growth of 3.4% on YOY basis. Our ad revenues for the period was Rs 16,425 million compared with Rs 15,973 million, higher by 3% YOY. Circulation revenue grew by 7% YOY to Rs 5,145 million as against Rs 4,814 million, largely an outcome of volume growth driven by circulation expansion strategy and without any reduction in cover prices. consolidated EBITDA stood at rupees 5,875 million with margins of around 25% against EBITDA of rupees 6,592 million with a margin of 29% reported during FY17. Further, excluding circulation expansion related one-off expenditures and previous years' non-recurring gains on account of private treaty business deal and music royalty reversal of radio business, our EBITDA has registered YOY growth. DVCL's consolidated PAT for FY18 stood at rupees 3,240 million as against rupees 3,748 million delivered in FY17 after considering forex loss of rupees 7.5 million. Further, excluding circulation expansion related one-off expenditures and previous years' non-recurring gains on account of private treaty business deals and music royalty reversal of radio business, our PAT has registered high single-digit growth YOY. We have maintained our leadership in legacy markets of Madhya Pradesh, Chhattisgarh, Chandigarh, Punjab, Haryana, urban Rajasthan, and urban Gujarat. As per Indian Leadership Survey, Dainik Bhaskar Group has maintained its leadership position as the largest newspaper group of urban India. It continues to hold number one position as largest read newspaper of NCCS AB. It also continues to hold number one position as largest read newspaper of NCCS A. Our performance this quarter reflects a culmination of all efforts we have been undertaking over the last 1 year in implementing editorial and circulation expansion strategies, which have played a strong complementary role. We have successfully completed the entire Bihar expansion drive. We have aggressively expanded copies in circulation, reflecting over 2x growth across 38 districts covering key Tier 2 and 3 cities and towns in Bihar with around 7 lakh copies. The circulation growth campaigns have been supported through impactful on-ground activations and reader engagement initiatives across India. DVCL's non-print business continues to create stronger bonds with its digital and radio audiences through some unique activations. DainikBhaskar.com continues to maintain number one spot for Hindi news website, and DivyBhaskar.com continues to remain number one Gujarati news website. Our page views for the month of March 2018 were 1 billion, while our unique visitors for the same month were 74 million. DVCL's radio business continues to be the largest player in the rest of Maharashtra and the number one player in Chandigarh, Haryana, Punjab, Rajasthan, Madhya Pradesh, and Chhattisgarh. Our radio advertising revenues for this quarter stood at rupees 362 million as against rupees 330 million in the same period last year. EBITDA grew by 45% YOY basis to rupees 160 million from rupees 80 million. Our board today has considered and recommended final dividend of 10% on rupees 10 face value per share. DB Corp has always maintained and exercised the policy of not to keep cash on books beyond minimum requirement and to distribute excess cash amongst all our shareholders. Our board will continue to maintain same policy and will continue to evaluate different and efficient avenues for distribution of income. My colleagues and I will now be happy to respond to questions. We look forward to continuing our interactions, and please contact our Investor Relations Department headed by Mr. Prasoon Pandey for all further requests and queries.
Thank you. Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone wishing to ask a question, may please press star and 1 on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vivek Anand S. from Ambit Capital. Please go ahead.
Hi. Thank you very much for the opportunity. 2 questions. One on the ad growth. So you saw print media ad growth of around 9%. How much of this was driven by yield and how much by volumes? And if you could, Girish, if you could discuss the key categories and the categories that grew for you and what didn't do well, that would be great, along with a discussion on the various markets, markets that grew faster than others and laggard markets. That's question one. And the second question is on the dividend payout. So the 1 rupee dividend per share that we are declaring, last year also there was an expectation that a greater amount of dividend would be paid out, and cash on books keeps on accruing as our business clearly generates healthy cash flows. So what is the thinking with respect to cash on the books? How much cash do you need on the books to in the long run, and how do you look at returning cash to shareholders? Thanks.
Okay, let me answer your questions one by one. The first one is that we have grown by 9%, out of which almost 80% growth has come because of the volume and 20% from the yield. Second, what are the categories firing up? So the categories which have been able to grow is, if I talk about the YTD or maybe Q4 also, it's largely a bit of education, bit of FMCG, banking and finance, and smaller categories. Unfortunately, the bigger categories of real estate, they are showing little bit of growth, but not to the original number back as yet. Similarly, even a category of education is growing at a single digit. So the large growth which were to come or we are expecting, the time when we will get into a double-digit growth will only happen when the categories like real estate, automobile, and education start responding into a double-digit growth. Coming to your third question about the dividend. As we just made an announcement that as per our board decision this time, we have given 1 rupee, 10% dividend. I want to assure all the investors, stakeholders, that as a company, we do not have any plan of any big capex this year, and also we are not looking at any kind of acquisition or any kind of investment somewhere else, or any radio or anything else. As a policy, we have been ensuring that the company doesn't keep much of cash with us. Whenever there's a cash, we would like to give it back to the investors and our stakeholders. We are in the process, which we've been doing from last 2-3 quarters, finding out ways, more efficient ways to return this money, reserve which we align, which is with us, to our investors and stakeholders. So I would like to assure you that this money, which is currently in our balance sheet, frankly speaking, company doesn't need much of money in the balance sheet at all. There is no requirement of the money. That also takes me to another question about capex. So this year we did a capex of 161 crores. Out of this 161 crores, the large capex went to Bihar, around 30 crores in Bihar as a capex, another 25 crores in Rajasthan for upgrading the printing machines. As you know, we are doing a circulation drive in Rajasthan, and the circulation is growing, so we need to have the printing capability in all the markets to print those copies. Similarly, we invested around 20 crores in Madhya Pradesh in upgrading the capability, and around 20 crores in Gujarat also. We did spend around 11 crores in the IT upgradation of the network in the various places. So all this put together in various segments, we had to spend 161 crore capex this year. But when you look at this year, which is 18-19, the capex requirement, which is a maintenance capex, is in the range of around 50 to 60 crores. So it's clearly evident from the data required that company doesn't need much of cash, even in the 18-19 also. Be rest assured, our board is evaluating certain efficient way to return this cash to the stakeholders. Thank you.
Right. Girish, thanks a lot for the elaborate explanation. Just if I could follow up on the advertising growth, what was the growth rate of national advertising in your case? Because clearly by now you have the IRS data going back to national advertisers, telling them the new readership metrics. So how did that fare vis-a-vis local categories? And any comments on the key states and their growth trends?
What has happened, the national and local, they both have been equal percentage so far. Even when I look at the month of April, which just closed last 10 days back, 15 days back, the percentage has been the same for national and local also. So IRS did one advantage to the print industry in India. That means because of the paucity of data in last 4 years' time, there were a lot of underlying murmuring happening about the status of print growth in India. A lot of clients were thinking that print may not be growing and all that. So IRS data and the latest ABC release also clarifies that the print in India is growing. As per IRS also, the print readership has gone up, and as per ABC also, it has gone up. So that one good thing has come out, and I've interacted with dozens of clients, and they all are happy about it, that all that myth about print going down or stagnating has gone out in their mind. Now, the real growth based on the IRS data is going to come in the months to come. As of now, we really can't indicate. So, again, we can see in a couple of categories there has been a good growth. But some of the categories are not being able to grow. And this is pretty, erratic behavior of various categories. Like automobile, we were expecting launches in the last quarter. But unfortunately, not many launches were happened in last quarter. And because of that, there was no big advertising happening in print. Yeah.
Right. All right, sir. Thanks. I have more, but I'll come back.
Thank you.
Thank you. The next question is from the line of Shalini Gupta from Quantum Securities. Please go ahead.
Good evening, sir. So in your opening remarks, you mentioned that because of one-off items like these private treaties and all of that, were it not for that, your EBITDA would have been higher. And similarly, obviously, your profit after tax would have been higher. So if you can just quantify this.
Frankly speaking, we can quantify it to you, but generally we took a call that we don't want to explain that much in detail. Having said that, there are three elements. One is the private treaty part. Second thing is the radio royalty, which is anyway in the public domain around 5 crore rupees last year, 6 crore rupees last year. And then there is a big amount which is a circulation expansion related expenses of Bihar, Gujarat, Rajasthan and the other markets also. Now, to be very honest, there are two ways to look at it. One way is to justify and say, if that would have not happened, my EBITDA would have been higher or whatever. But frankly speaking, we are in the business for expansion. If we don't invest in the market and just simply say, no, my EBITDA is maintaining that way or minor growth, so we gave that justification from the perspective of telling the community that we are not going in the wrong direction. But frankly speaking, we are investing in the market. We are investing in Bihar from couple of lakh copies. Today we are at 7 lakh copies in Bihar. In Gujarat, my circulation has gone up by 1.5 lakh copies. In Rajasthan, I have grown by 1.5 lakh copies. In Madhya Pradesh, we have grown. So all that requires investment in the market, and then only you can expect the result going forward. So frankly speaking, I would request you not to go from that calculation as a justification from us to say our EBITDA has been okay, we would have not done this and all that. Frankly speaking, we have done an investment and we are very happy about it, and it will yield results going forward to us.
Okay, and so my second question, in the notes to the results, so basically there's been a write back of 5.7 crores provisions that you had provided earlier. So these have been just knocked off from the cost from the cost?
Yes, knocked off from the cost.
Okay, and sir, some outlook on how the ad growth is faring, because we have ad growth has been an issue sometime in the past. So if you could just give some sort of outlook on ad revenue growth.
Yeah, I can give you any kind of number just now. I can rattle those Excel sheets which are lying in front of me and give you any possible number you want.
No, but I mean, see, like, what kind of ad revenue? Because, see, the whole of financial year 18, ad revenue growth has not picked up. For one reason or another. Earlier it was demonetization, then the GST and the rest of it. So, I mean, going forward, are we saying that the ad revenue growth will be more or less at least 7 to 8%, or I mean at least same as this year at 9%? So, like, if you can give some indication as to what you're experiencing now.
So as I told you that we are living day by day, week by week, month on month. You know, so I can only say that single-digit growth which came in last quarter, we all are working hard for a double-digit growth in this quarter. But frankly speaking, to make you feel happy, I can say yes, we will be growing at double-digit. But am I be 100% sure of that? No, I'm not. For simple reason, because I don't know how the market is turning. You know, like for example, real estate, it's been almost 2 years. We've been thinking real estate will turn around much faster and all that. It has not happened. You know, it goes up for a month, then because of some issue, RERA or something else, suddenly market goes down. So really, frankly speaking, what I can promise you is that we are not leaving any opportunity untapped. You know, what I can promise you that our team is really working hard, and we'll be happy to share with you one-on-one also with all the possible things, and we'll be happy to learn from you guys if at all we are doing any mistake anywhere. But just do any crystal gazing and saying that my number will be like this would be a difficult task.
Okay. And so my last question, like you had, I think in your opening remarks, you mentioned that your circulation revenue growth was not driven by yield increases.
Yes.
So would that be correct?
Yes. So what we have taken a call couple of months, quarter back, that circulation prices in our markets are anyway at a 4 or 5 rupees to the reader, you know, the cover price, reader. And we took a call that we don't want to increase this cover price anymore because we want the penetration to go up. So we've taken a call that for this year, we'll be increasing circulation and not increasing the cover price beyond a point. And hence this growth, what you see right now coming in the circulation is more because of the number of copies increasing rather than the yield increase.
Sir, but going forward, I mean, you don't have any plans to enter new territories. So, I mean, circulation growth would be at best 4 to 5%?
Not exactly, because see, we are not looking at any new territory. But when we did this exercise almost 9-10 months back in the state of Rajasthan and Gujarat, and we entered with the same expectation as you were saying, 4 to 5%. But then we promised ourselves that no, we are not going to stop by that. We want to really see it from a different perspective, how we can grow the market. You know, we have an example of a Kerala market with us, a small state with a population which is half of Rajasthan, but circulation-wise they are double of Rajasthan. We say, why can't we look at that market and increase the penetration? You know, so based on that, happy to share with you in Rajasthan, in a 9-10 months working in a market like Rajasthan, we are up by almost 1.5 lakh copies. In Gujarat market, we are up by almost 1.5 lakh copies. So there's been a strong growth coming from these markets of almost 10% plus. So we are hoping that next year also we should be able to work upon this 6 to 10% growth of circulation in these markets based on the groundwork which we already done in these markets.
Okay. Thank you, sir. All the best.
Thank you.
Thank you. Before we take the next question, we would like to remind participants that you may press star and 1 to ask a question. The next question is from the line of Rohan Samad from Multi-Act. Please go ahead.
Good afternoon. From what you have in the commentary that you've given and said that, okay, from the efforts that we've been making for the last 1 year, I just wanted to get an understanding out there that we would have seen some fruit of that, and besides obviously the fact that you mentioned that if the core contributors such as real estate, education, that starts contributing, then we can start seeing the double-digit growth. But the efforts that we are taking, when and how we're seeing that pan out, when can we see that things over the next, 2 to 4 quarters, we can see the fruits of that? Besides things turning around, that's the environment.
So what is happening when we evaluate ourselves from both the perspectives, that are our efforts paying off in the market or not? So when we look at the few categories in few markets, and we say, yes, we've been able to really increase our market share in few markets. Yes, we've been able to take a little yield up also and all that. So we feel that we are working upon it. But unfortunately, what happens suddenly, everything goes good. Like, I'll give you an example. This year, we had tied up with a couple of air conditioner clients for a big volume coming up, Unfortunately, the summer got delayed this year. And in the peak of summer, started raining in northern India. So the sale of air conditioner has gone out of the window. Now suddenly all those contracts with those clients have again been reworked by the client because they are not selling, and obviously we can't expect them to advertise if they are not selling and all that. So these are the things which are a part of the game. Real estate is one category which we were thinking that after RERA came in effect, it'll be all hunky-dory, things will start coming back. But yet there is no free-flowing cash, money in the market where people are willing to invest in the real estate in a big way. So only the real user of real estate is buying a flat. The investors are out. People are not investing in real estate for any kind of return. So because of that, it takes a beating. For example, like one category, FMCG, we really worked hard and we've been able to show double-digit growth in that category, Or hypermarkets, small category, but since we approached in a different manner altogether, so there's almost 60% growth, but very little size of those markets. So there are categories which we are working upon, and so we can say we are working on it, but unfortunately the overall results are not coming, so we are not able to really come out and tell you that, guys, this is what we did and see the results.
Okay, so just one more thing. So if I were to say that when you said that the majority of obviously 80% of the growth has been volume driven, so if I were to understand that, would that be, a majority of that be because of the initiatives, or how would you put that?
Yeah, so initiatives also, because what is happening, the walk-in customers' size is kind of reduced in the market today. So you have to really go and convince the guy for various initiatives to give the business.
Okay, thank you.
Thank you. The next question is from the line of Vikas Mantri from ICICI Securities. Please go ahead.
Yeah, good afternoon, sir.
Good afternoon.
On the dividend payout fund, you said you're looking for other tax-effective measures. Does it mean that we will also compensate for the low payout that we have done in 2017 by other means, or we are going to see that a new policy from 2018 or FY19 onwards only? Wanted to understand that.
See, what we are going to do, partly yes to your answer, but what we are going to simply say that whatever is the cash lying in the balance sheet at a particular point of time, we want to really utilize it for the stakeholders giving back, and that should happen in next couple of quarters.
Okay. On the Bihar, Jharkhand market, now you've gone with an expansion drive, and perhaps it will show up in your readership numbers with the next survey. What I wanted to ask is, does it unleash a new wave of competition? Next time when it shows up better numbers for you, the other players start fighting back, and then we go back to a situation where now this becomes a norm where one or the other player is trying to regain market share and therefore cut cover prices, and it becomes a regular phenomena. Right now in Bihar, Jharkhand, then maybe UP or Punjab or MP, that way.
So, see, we have seen this kind of phenomena in last 15 years' time in all the markets. So wherever we went and we got the number, competition did drop the price. But price is not the only reason for somebody to read a particular newspaper. It is more about the quality. And there's a reason why when we enter at a low particular price, we are able to increase the copies. Let me give another example of, say, Rajasthan and Gujarat. Rajasthan and Gujarat, we've been able to increase these 10% plus copies on a back of the higher cover price. So there is no price benefit in Rajasthan or Gujarat to the reader. But yet, we've been able to increase the copies. Similarly, in Bihar, we strongly believe that once my readers, they read my newspaper for a number of months and all that, the loyalty factor will go up and we will be able to increase the cover price. Just to further add on, recently all the competitors in Gujarat, they realized that they couldn't stop Bhaskar from getting the subscription number of copies. So they all finally took a call to increase their own cover price. So they have all increased the cover price anyway.
Okay. What is our cover price YOY this quarter and last quarter? What was it? Yield? So
our yield, if I look at overall, we are at 2 rupee 63 paisa. And my gross cover price is at 4 rupee 8 paisa.
Same number last year?
No, it has increased by 1%. Almost by 1%. The cover price, there is no increase and there is no decline also.
No, sir, but our circulation has grown, revenues have grown by 6%.
So that all has come largely because of the number of copies growing.
No, so the number of copies have increased by 18-19%. So it would mean a decline in cover price.
No. What happened? 18-19% has increased in last 6 months' time. So every month there's been a growth. If I analyze that number, because we are seeing a 12 months number, correct? So for example,
I'm looking for this quarter only. That is why.
Oh, you're looking at for this quarter only. One second. Q4. So Q4, what the number is 2.63 and it was 2.65. Yeah, this has come because the number, okay, let me give you the number again. Q4 17 number was 2 rupees 60 paisa, which has now become 2 rupees 63 paisa. This reduction has happened because the Bihar cover price is not at 4 rupees. Bihar cover price is at 3 rupees. So if I take an average, that way the impact is not showing here. But if I take Bihar copies out and show the impact, then it will be higher on that. Because Bihar cover price is 3 rupees compared to other markets cover price, which is at 4 rupee plus.
Okay, sir, I've still failed to get the math. I'll get in touch back with Prasan sir and get the workings.
Please, we'll give you the entire chart on this.
Okay, thank you, sir.
And apart from you, anybody else who wants to understand this, most welcome, please.
Thank you. The next question is from the line of Jay Doshi from Kotak Securities. Please go ahead.
Hi, thanks for the opportunity. First, a quick clarification. Did I hear it right? You mentioned that circulation copy growth will be about 6 to 10% in FY 2019 as well. So, will that be from the current levels? So, year-end level, the 59.6.
Yes, so year-end level was at 59 lakh copies.
Correct.
So, this copies, we want to grow by 6 to 10% next year also.
Understood. Now, can you sort of give some outlook on newsprint prices? So, again, from this quarter's average cost, what kind of inflation do you expect next year? Or a YOY basis, what kind of inflation do you expect in terms of price and costs?
So, Q4, the price increase was 3.7% overall, but that's not a real reflection. But if I look at this Q1, the real reflection will come in Q1 and Q2.
Right, sir.
So that could be in the range of, 12-15%.
That will be 12-15% YOY, right? And not from Q4 levels?
No, YOY.
Understood. And should that be sort of, you expect that to be for the full year as well? 2Q rate will more or less?
Depends. As we are buying newsprint, the prices are changing practically on a 15 days basis. But I think, looking at the last trend, which happened, similar kind of thing happened some 15-20 years back, I think this is a phenomenon going to stay for at least 2-3 quarters. So we are hoping that by the second and third quarter, price should start cooling down.
Right. And are you locking in for a longer period, or you are not locking in price with? So how are your contracts? Or?
So we are doing a ranging depending on the market to market, mills to mills, from 2 quarters to 3 quarters.
Understood. So if there is any price correction, you will get the benefit immediately. It's not long-term contract.
Yeah, that's what we are trying to figure out.
Right, sir. Third is, Can you give us some outlook on, what is the sort of acceptance of IRS data in the market and whether there are any changes in the yields or pricing that are taking place on the ground based on IRS?
So there's been a huge acceptance of IRS data in the market. And I was very happy to note that every possible client whom we met were very positive about, at least the data came out. Otherwise, they were under myth that the print may be going down and all that. So it's a good thing. I will not expect any immediate yield improvement in the advertisements because of the IRS data. Because I think what IRS data first thing is going to do is to make sure that the clients have their confidence in print continuing. And then they start investing in print on the same manner what they've been doing, not taking it down and taking it up actually some notches. And then maybe a couple of months going down forward, they might get some more confidence to increase the price also.
Right. And is this across the industry? I mean, for
yes.
all players, it's going
yes.
to be...
Yes, because see, we made, there's a committee of MRUC and ABC, those who are making presentations to various clients. Probably the first time all the publishers are going to the agencies and clients and updating about the industry. And we got a phenomenal response from all of them.
Right. And the final question is, almost 3 or 4 quarters and, there's absolutely no momentum on the digital side in terms of advertising revenue. So how should we think about it? What is your strategy there? And when do you think, that business, that revenue stream will start growing again?
So the last couple of quarters, the whole social and the platforms, came up giving it momentum, but the revenue side, kept getting compromised. So going forward, what we are doing is we're building, we're putting up a new content strategy to get direct traffic to our apps and to our website. So hopefully in coming quarters, we will see our focus is to get people direct to us and not just through networks. Of course, the whole of last year we struggled with changing algorithms of Facebook and with with search, struggling to grow in search in Google. But while those challenges will remain, but going forward, our strategy will be to build direct traffic, build loyalty to the brand. So we'll hopefully next quarter we'll start sharing with you the changes that we're making.
Understood. So should we expect any step up in investments or costs on this business, or
not significantly for now?
Right. And this year there were quite a few one-off costs for the past 2-3 quarters related to circulation expansion, and now you are likely to continue that in FY 2019 as well. So will there be similar level of costs in FY19 as well, or it will help us to sort of, get a slightly better handle of cost structure, given that, newsprint prices are also quite volatile, and, the past couple of quarters we've also not been able to estimate the extent of one-time expenditure.
There are no one-offs in the year 17-18. 18-19, there are no one-offs what we see. CAPEX is already, as I indicated to you, we are looking at a CAPEX of around 60 crores, 50-60 crores, which is largely a maintenance CAPEX. And there are no launches lined up in this year. I don't think there will be any one-off like that.
Understood. Thank you so much, sir. That is very helpful.
Thank you.
Thank you. The next question is on the line of Yogesh Kirve from B&K Securities. Please go ahead.
So, hi, thanks for the opportunity. So we have seen a bit of an increase in the receivable days. So could you just highlight what are the key reasons and how should we expect it going down the line?
See, what has happened, the government advertising percentage went up slightly in last 3-6 months' time. And government does take some extra time. So because of that, there has been a slight increase in that thing. But nothing to worry about. Everything in control on that.
And the data days on the commercial side is continues to be stable?
No such issue on that.
And had there been any GST related or any other kind of issues which got reflected?
No. Fortunately, everything is smooth line on that.
Okay, sure. And sir, secondly, in the radio business, I mean, what are our expectations about the growth? I mean, I understand it has grown by about 10%, but this was the business which have been growing well before various the disruptions and demand and GST came in. And on top of that, we have some new licenses as well. So where do we expect that growth could head to in the coming years?
So the last year, the new stations, happy to share that the new stations, just about doing break even, and which is in about 15, 18 months of average launch. So those stations will start adding to the EBITDA this year. They'll broken even in Q4, just about, and they would contribute to the EBITDA this year. And the bigger stations, we're adding new elements of new opportunities for advertising, and we should be able to maintain the growth momentum going forward.
So it is safe to, I understand there's an existing station and new station. So at the existing station, is there the possibility of able to have a double-digit sort of growth? I mean, does that kind of an opportunity exist as of now?
We are working towards that. It's a combination of...
It should actually happen. Why? See, what has happened in last almost 6, 8, 9 months' time, in certain stations, the more frequency got rolled out. Okay? When the competition suddenly comes in, you lose the momentum for increasing the rates and some volume also, But now, since that has been stabilized, we believe going forward now, this double-digit growth should actually come first in bigger centers only.
And so finally, so you said the newsprint prices are going to increase. So are there any measures specifically to counter this impact? I mean, anything in terms of the imported domestic mix or paginations or any other thoughts?
There are few areas which we already have worked upon, like checking the pagination, slight sizing of a newspaper, rationalizing on the mills, their distances to our consumption centers and all that. That all has been taken care, and a couple of percentages saving has already taken care because of that. But frankly speaking, there's nothing substantial can be done because we can't reduce the number of pages because advertising has to be carried. I don't want readers to feel they're reading paper only for advertising. So there are little things which we have already done, and now we all are hoping that the newsprint prices should cool down in a couple of quarters, and that should give us the relief.
So in the meanwhile, you talked about this 12 to 15% increase. So are we comfortable that it's not going to be more than this because some of the comments that we have been getting in the market is points to a very higher number?
So what happened, all those higher numbers, we also have it, but if you have to average it out, because it's not that every mill has increased, it's not that none of the company had a stock, so like we had some of the stock lying with us and all that. So the price which I have told you for the next quarter is a blended with our stock, with our rationalization of everything and all that.
Yeah, great. That's all for me, and thanks a lot.
Thank you. The next question is from the line of Amit Kumar from Investec Capital. Please go ahead.
Yeah, thank you so much for the opportunity, sir. Actually, just, following on, to the point, for previous participant also, this year, in fact, this quarter as well as this year, very, very clearly ad growth, and given the environment, it has been driven more by, volumes. There hasn't been sort of any opportunity, for yield, increases. I understand, I mean, you're not sort of taking, any, yield increases now, but as you sort of go through the year, are we sort of looking at a more, balanced, growth, between yields and, volumes, or, FY19 also you believe, going to be more, volume driven?
So frankly speaking, 70-80% growth should be from volume and 20-30 from the yield, because certain yield correction anyway happens. But looking at the market scenario, anything beyond 20-30% of the volume growth or overall growth will be difficult to come from yield.
So, again, the reason why we are a little bit surprised by that is because, with IRS sort of coming in and, that comfort on, print numbers, so advertisers sort of seem to be, excited about print, again, but, not sort of giving you, yield hikes. And second question is that, I mean, when do we sort of have a sort of corollary to that? I mean, when do we expect the, next round of IRS to turn up?
So see, obviously the reports have come, and the first benefit the reports have given to us is that the confidence back in the minds of clients that print is not dying. Because a couple of clients, when I met them, so they actually thought that, okay, print is now still hiding in India. But when he showed them the numbers, they were pleasantly surprised and happy. Coming to the IRS, when is the next round? So IRS, as you know, it's moving around. So they are now fielding, moving average working. So they are fielding the next survey now, sometime from month of June or July. So next report, once they complete a quarter of working and all that, I think should be out by December. So which will have one new quarter and the 3 old quarters. And then they keep rolling it every quarter or 6 monthly.
I'm sorry, can you just repeat that last bit? I missed a bit.
When IRS does a 12 months field work, 4 different quarters. They will do 1 quarter field work, say, for example, in July, August, September. And that quarter, they will merge with last 3 quarter survey done and then give it an annual report again sometime by December.
All right. Understood, sir. Thank you. That's it from my end.
Yes.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, please limit your questions to 2 per participant only. The next question is from the line of Gaurav Agarwal from ENR Advisors. Please go ahead.
Hello. Thank you, sir, for the opportunity.
Pleasure.
Sir, if I understand correctly, you said for Q1 FY19, you are looking at 14-15% kind of increase in your raw material prices. Is that understanding correct?
Yes.
And that includes the circulation increase which we are looking to add in Q1 FY19?
No. See, what I said, 10-15%, the cost, the rates of the news going up. Then on the circulation, whatever the impact will come in, that will be there only. You know,
that is in addition to that.
Yeah. So let me just give you, for example, Q4. If I look at a Q4, my newsprint cost increase in Q4 is 20%.
Okay.
Yeah. Why 20%? Because the price up is by 10.5%, but the main impact is with the PO. Around 10% has increased because of PO, the print order itself.
Okay.
And the pages increase also and all that.
Right.
Yeah.
Right. Got it. Okay, and sir, you have 2 categories, national and local advertisers. So how has these 2 categories done on a YOY basis? So 8% is your overall growth in ad revenues. So how have these locals have done and how has the national advertisers done?
Almost similar.
Okay.
I didn't see major competition among both of them to surpass another. So they both were around almost equal percentage.
And government is what percentage of your revenue in Q4?
Around 15%.
And we put 15% to that in local or in national?
Both. Government is local and national both.
Okay, so split is equal, I would assume.
Yeah. National would be slightly higher.
Okay, fine. Thank you.
Thank you. The next question is from the line of Vivekanand S. from Ambit Capital. Please go ahead.
Hi. Thank you so much for the follow-up. So on the digital side, I see that the unique visitors on your website at around 74 million in March, they are lower than what you saw in March last year. So clearly, till 2017, you were seeing a sharp jump in unique visitors on the portal or on your websites. But despite many more users now embracing data, I'm surprised to see that the unique visitor count has gone down. Is this one of the major reasons why you are unable to monetize well enough? That's question 1. And related to this, what has changed in the business to really depress the unique visitors? Thanks.
Sure. So 2 things. One, what we've lost are the users who are actually not loyal to the site. They were people who weren't coming often to the site. These are people who came through platforms, they came through social, and they happened to, changes in algorithm, as I mentioned earlier. So that's been a loss. The real loss in numbers is basically from the fact that the monetization has gone down. So while the same users, monetization, what we saw previous year, those monetization has gone down, which means what we are, as I said, we are working on to see how do we build stickiness, how do we build this user coming directly to us rather than going through platforms or through social. So that's the way forward strategy, which is the learning from last year. Is the platforms, while they give you good spread, but they don't help you monetize and they don't give you loyalty.
Right. Just one small follow-up. Since you want to build direct traffic, I see that the investments or the operating expenses in the digital segment, that hasn't materially changed this year compared to last year. Is there any specific reason why we are not investing more in this business? I'm talking of the operating expense in the digital business, which is around 70-odd crores, similar to FY17 levels. Just trying to understand if you are trying to pursue more traffic coming directly to your website or apps, should you not, would it not require you to spend more money to attract the users? Help us understand this.
What we've been doing for the past 1 year at least is we've been spending on acquiring people from platforms and not really direct. They were consuming the content, but they were not coming to the site directly. They were exploring us. They were discovering us. They were not building loyalty. And the loyalty is built by either downloading an app or becoming an active user of an app or coming to the site directly. So what we're going to do is pivot this cost to acquiring people who will build loyalty for us. That's the game plan for this year.
All right, sir. Thank you very much. All the best.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for their closing comments.
I thank you for your participation and time on this earnings call. Hope that we've responded to your queries adequately today. We'll be happy to be of assistance through our Investor Relations Department, heading by Mr. Prasoon Pandey for any further inquiries. Thank you and have a great day.